Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this almost noontime, late Friday morning on November 22nd. I am going over a pretty bad chest cold here for the last week and a half, so apologies if my voice is a little tweaked today on the video. Stepping back since the election from a top-down perspective, it's been volatile. We had a huge rush higher, of course, and then last week wasn't abnormal, but it was disappointing. I think a lot of the indexes gave up most of their post-election gains. A lot of them gave up some of their breakout gains, the ones that had been basically capped since July. But then this week, of course, we've bounced back, so that's encouraging too. We'll see how it goes. Next week's a holiday shortened week, so which should be positive, so to speak. But we'll see how it goes in the near term. We're also seeing some, from a top-down perspective, some yellow flags, I guess. The number of new lows has been a little bit too high for our comfort when you're looking at the broad market. There's been a little bit of divergence if you want to get into that with the advanced decline line, stuff like that. So from a top-down perspective, I would just say it's positive, but volatile of late. As has been the case, though, really since August, the main sort of tell for the evidence has been bottoms up, which means individual stocks. And on that front, the evidence is pretty much pristine. That doesn't mean there aren't potholes or the occasional stock that gets hit on earnings, of course. But overall, there's just a ton of leadership, and it's very broad too. There's so many stocks that look great. There's a lot of stocks that look solid that nobody's talking about. They might be 2 steps forward, 1 step back, okay? To the point where right now I would say I spend a good chunk of my time sort of devising scenarios on, how to deal with the stocks we already own that are really good winners. It's a good problem to have, don't get me wrong, as opposed to, market timing indicators and stuff like that. So in Cabot Growth Investors model portfolio, we're bullish, but we had sold, we had taken partial profits in 3 names recently that kind of boosted our cash up to about 24%. So we put some of that to work this week. We're about 18, 19% cash. And I would say we're going to put more to work. But I do think on the buy side, again, it's just you want to pick your spots. Assuming you're heavily invested, you've been following along, you want to pick your spots. I wouldn't be plowing into 5 stocks that are 70% above their 50-day moving average or something like that. Because, at some point, even if it's not the end of the overall move, there will be a big shakeout, and it'll be hard to sit through some of these things that can fall 5 to 10% in a day given the runs they've had, okay? But overall, I'm not trying to poo-poo anything. Overall, things do look good. The evidence looks good, especially from a bottoms-up perspective. So we're holding most of our winners and looking to put more money to work here, ideally at higher odds entry points, okay? Let's hop into the charts. As usual, I'm using a program called Market Surge, product of Investors Business Daily. You can learn more at marketsurge.com. Here's the NASDAQ. Whoops, let's get the line pen out. Here's the NASDAQ. It's kind of what I was talking about. This thing had been positive but not powerful, right, is what we had talked about. And then you had this nice breakout, so to speak, on the post-election results. And then it kind of came all the way back as of last Friday. And to be honest with you, it's really not doing much. I mean, it's up this week, don't get me wrong, I'll take it, but it's not like it's powering back or bouncing super strongly. Honestly, what we've seen, I continue to think the theme here is that, not to go on a tangent already, but, you get what you pay for. When the NASDAQ was going nuts in May, June, early July, it was very, 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 very narrow. And the indexes look great, but honestly, even among growth stocks or whatever you're looking at, it just wasn't much there. I mean, there was a few names working, but it was the Nvidias and all that. Those sort of stocks, which have such weight in the indexes, are kind of, they're okay, but they're not doing that much, okay? Whereas the rest of the market is doing great. So I think that it's just kind of the opposite of what we've seen. So far, I mean, more important to me, as I keep saying, is the trend. If the NASDAQ got below the 50-day line, I wouldn't just say, oh, it doesn't matter, the individual stocks. No, eventually that would matter. But at this point, that's not what we're seeing. It's above the 25-day line. We're a good day or two from new all-time highs. So the trend is up, okay? S&P 500, we'll run through the indexes like we always do. S&P 500's been stronger. You can see you had the post-election pullback was more controlled, and now it's sort of back towards highs. New York Composite, the trend is up here. Again, if it changes and you start getting below this red line, the 50-day moving average with a lot of indexes, that's probably going to have an impact on any stock, no matter how strong it is, I would think. So that's why we continue to follow it, even though that's not where the action is, okay? Small caps and mid caps especially, this is the same sort of thing. The action was disappointing. I mean, this was about a 6% pullback in the IWM from, I don't know when this was, but basically last week, call it. to the 25-day line. But the bounce since then, it's been pretty impressive this week. Now, do we come in next week, or again, next week's holiday, but does it come back down here and then back up here? We'll have to see how it develops. But so far, so good. And obviously the trend is up. Same thing with mid caps, all right? And not to just keep charting you to death with the indexes, but same thing here. This is the IBD 50 index, breaks out, comes back, retests, goes up. The retest of the breakout point, not that I'm a big, again, breakout person with indexes, but the retest of the breakout point is normal. It's not ideal, but it's normal if you obviously rebound from there. So we're seeing that on a bunch of things. This is QQEW, but QQQE, same thing. Again, kind of came back down, tested support, has ramped back up. So as long as I would say if we start to do this a lot, and a lot of individual stocks do that, this is just playing a scenario out, that would be more of a yellow flag, especially with short-term sentiment is just, there's a lot of euphoria out there, okay? So we'll see how it goes. But if we can kind of hold these gains or pull back normally and then extend them next week or a couple weeks out, all good. Trend is still up, okay? Another couple of things here just that I'm seeing. Number one, financials. I don't trade. Bull market stocks I do like, but besides that, I'm not trading banks and insurance companies and stuff like that. But this is the XLF and it's extended, but don't get me wrong. This is not usually something you're seeing when the market's in trouble or getting into trouble. So that's pretty bullish. And even if you look at, this is the KRE, which is regional banks. Of course, this was when KRE was the group that back here in the SIVB, the Silicon Valley Bank implosion, I should say, last March of 2023. So they've been there, but even that, they look good too. It's not just JP Morgan and, Bank of America or something like that. So that's definitely a positive here. And then just as we like to look at XLP, it is popping today. This is consumer staples, but, so we'll see how it goes. It's been outperforming the market here for the last week, but overall, the index is near new highs and the XLP obviously is down here. If that changes, maybe something else changes, but so far, so good on that front. Another thing I just want to say, and maybe people do, I don't really know. They don't tell me, if nobody says, hey, take profits or whatever. I took profits on this. But just, if you do own some stuff, consider partial profits. It's, you want to feed the ducks while they're quacking, some of it. And then hopefully the rest of your shares can go up for another year and go up 1 billion%. The way I look at it, it's like having your cake and eat it too. If the stock, this is Celestica CLS, and we advise we took a profit actually here in top 10 today because it's been up 30% in a month. Might as well take it, but that's a little bit of a short-term letter. But the point is you get a stock that really runs up like this, you could lay off some shares here. Say you bought it down here, you have a stop above your cost, wherever that is, and then just see how it goes. If the stock implodes, you'll be glad you took profits. If you're totally wrong and the stock goes to $150, you still have a good size position, okay? This is assuming you have, proper portfolio management, position sizes and stuff like that. But I'm just seeing more stuff like this that's short term. This is Netflix. Netflix is a different animal, obviously, big cap stock. But, it's gapped up on earnings beautifully here. And now it's stretched itself here for 2 or 3 weeks. Maybe it stretches itself further, but it wouldn't surprise me if you, start pulling back here, consolidating, or maybe you have a little bit more upside, then pull back, that sort of thing. So it doesn't hurt. My point is that I'm not saying go out and sell 1/3 of your portfolio today. I'm just saying it doesn't hurt to go out and take a few shares off the table here and there. This is Blackstone, bull market stock. It's running into round number resistance here at 200. The stock looks great. And just for full disclosure, not disclosure, but just, this is a long-term breakout that it had 2 or 3 months ago, and it's really accelerating higher now. That was a monthly chart. This is a weekly chart. But, when things are extended like this, they can always go higher, but sometimes letting a few shares go, if nothing, it puts profit in your pocket, obviously, but if nothing else, it can give you more leeway to give the remaining shares some rope, meaning like, okay, instead of having 200 shares, now I have 150 or 130. So when the thing does pull back, it's not as damaging. It's not as, you don't feel it quite as much in the portfolio, okay? So just a reminder, I'm not saying go sell everything. I'm bullish, but, we have been taking a few partial profits when things are sticking up in the air, and I don't feel bad about it at all, okay? In terms of individual stocks, there's not a ton that have like great entry points right now. That's one of the things that I would say near term. So Shopify, I don't think I mentioned this. Yeah, no, it's broken out. I didn't do the video last week. So Shopify, SHOP, obviously an old leader, had a nice recovery here and then had a huge deep base. And then, just on the weekly chart, just super, super low, like no distribution at all since this was this August wacky, week when we crashed and recovered. And then you had this huge volume breakout last week. This, it's a little sloppy here, just very near term. So maybe it fails, maybe it doesn't work. But overall, I just think it's a decent setup. It's obviously a bigger cap stock, but it's a big liquid stock that gapped up on earnings. So I find that kind of interesting. Shopify, SHOP. This is Planet Fitness, PLNT. It's been out of favor for years, and they've had bad news for years. So I'm not going to get into that. You guys can play that. But on the monthly chart, you can just see it's been in this, I don't know, really since 2019, this sort of long consolidation, first with the pandemic, then the bear market, then some other stuff, so on and so forth. But now it's just kind of popping to new highs on earnings a couple weeks ago. Round number resistance here, maybe near 100, although it's trying to get above it. Looks pretty interesting. It's not the fastest grower anymore, but it is kind of an interesting cookie cutter story. So Planet Fitness could be re-emerging. HubSpot's another one. Software hasn't been, like cloud software hasn't been like the strongest group, right? But there's some things that are starting to emerge here. HubSpot was one that did gap on earnings, I'm going to say 2 weeks ago now. I think it was 2 weeks ago, yeah. And it's sort of coming out to new highs. They still have pretty good numbers. You can see all the sales and earnings growth. Supposedly growth is slowing, but the stock is acting like that's either discounted or maybe it's not going to slow. So kind of interesting here. What do you do with it? I don't know. This is what I'm talking about. You see some stocks that look fresher. They're just getting going, but clearly extended. So if we do get a shake or some tightness, or maybe it goes higher and then shakes out, it would be a name to keep an eye on. One kind of interesting group, I know this isn't the sexiest thing, but this is like payroll. So this is Dayforce, which used to be Ceridian, symbols Day, DAY. Again, it's just, the earnings line has been great. And this is the earnings line, just up, but the stock has been just nothing. But now you had this sort of volume cluster on the daily chart on earnings, before and after earnings back in late October, early November, pull back to the 25-day line, popping higher. Looks proper. Paycom used to be the big winner here. I'm not saying it's going to relive its former glory. This is PAYC. You can see how huge of a run this thing had into the pandemic top for many, many years of the monthly chart before crashing. But again, it's been out of the favor for years and then just really had this beautiful volume cluster on earnings, gapping up and holding up pretty well so far. Just kind of an interesting group that could be, out of favor that's coming into favor, okay? TOST payments, I always keep an eye on this. It looks like it's finally gotten going. This is one that this is, when I see this, it doesn't mean it can't pull back, but so this is TOST, restaurant payment systems and more, basically. And it kind of started to break out pretty well, but not really on the RP line until earnings 2 weeks ago. Okay, and then it's just been boom, boom, boom. This is now 3 straight weeks of, I don't want to call them skyscrapers, but that's a lot of accumulation going on. And you can see it on the daily chart, obviously, with this volume cluster and the stock's inability to pull back. This would be, honestly, I'm not sure how much it will pull back, but it would be interesting if it did shake out a couple of bucks or whatever. Viking Holdings, this is a cruise line. The Viking is like those river cruises, over in Europe. Although they do have a few more ocean cruise lines coming. A nice shake, not nice if you owned it, but a nice looking shakeout at this point in time on earnings this week down to the 25-day line has recovered. And you can just see on the weekly chart, it looks totally fine here. So again, finding an entry point, kind of tricky, but it's not that extended. It's obviously in a firm uptrend. It's a recent IPO. It's not over-owned. You can make the decision whether you're interested in where to buy it, but looks like a pretty good chart to me. I still like some of these networkers, like here's Lumentum, LITE, these sort of next wave. What's interesting is you did have Arista, which I think I mentioned a couple weeks ago. It doesn't look awful, but this is ANET. It got hit on earnings, and this very big, we talk about volume clusters on the buy side. Here's one right off the top after a huge run. I don't even know, 6-7 days in a row, right? 8 maybe. Way down. So who knows? Maybe in this environment, it just keeps going higher. But I would guess this one's not a leader at this point, okay? Lumentum's kind of a second tier name in the group, sort of a, down the food chain, so to speak. But again, nice breakout here, excellent action on earnings a couple weeks ago, and it's been acting well since, holding up. And then ALAB, which is this is a hot potato, ALAB. Very, very expensive valuation, and very, very, big run of late after a big decline. But it did kind of pop above round number resistance here, above 100. So we'll see what happens. This is one I'm kind of keeping an eye on. It can move 5 points a day. So this thing could easily be back at $90 in a couple of days if it wants to. But so far, it's certainly, the buyers are definitely flexing their muscles there. Medical stocks, also not where it's at. Oh, I have a ladybug on my shirt. That's interesting. Insulet, I think I've mentioned this before, PODD. We are seeing some breakouts. Very nice. There is old overhead here if you're looking for things that can go wrong. But a very nice base. Excellent, excellent, excellent tightness in here. Big breakout on earnings. Not a lot of follow through, but just kind of sitting here. So far, so good. And Excelsius, there's actually a few. So XBI, which is the bio, not to go on a tangent again. This got destroyed, not destroyed. It had a big pullback on politics, okay? I'll just say it that way. It is bouncing a little bit, but still, it doesn't look so hot. But there are some stocks, it's a growth area, and there are some stocks holding up well. EXEL had been kind of stair-stepping higher, had a beautiful reaction to earnings. Again, another big volume cluster down here, and it's been acting very well so far. So there's a couple of names in that group that are interesting, in my opinion, if the group, assuming the group's sort of recent decline is over, okay? And last but not least, I know this is going to be your favorite, but this, I have a hunch, I don't know, I'm keeping an eye on oil stocks. They're hated, they've been out of favor, and some of the cyclical stuff could come back into favor. It's not my main focus, obviously, but I do notice here's Baker Hughes, BKR, new highs. This is while oil's at $70. This is while the group is, this is the oil service sector, hasn't done anything here for whatever. It's going back to at least 2022. Okay, so BKR is up at new highs, and here's FTI, which is Technip, which is even more, growthy. Big stories, big numbers, at least for FTI, actually breaking out on the upside. Is this like a big buyable breakout? No, maybe not. Maybe it's one of these things where you just watch it. Hopefully it goes up, and then maybe you, if you're interested, play the first pullback. But I'm just keeping an eye. It's that time of year, end of the year. You could see some shifts in, not necessarily leadership, but some rotation, some groups that have been out of favor coming to life, like we saw with the payroll processors. So oil stocks, I'm keeping an eye on in the sense of the ones that have high relative strength. But the main focus is the market. From a top-down perspective, again, we're kind of back in that positive, not powerful phase, which is fine. There's nothing wrong with that. So we'll see how it goes. I would just, it would be nice to see the NASDAQ. Doesn't have to go up 500 points. But it would be nice to see it just kind of creep higher, keep the trend going up. But again, the main action has been among individual stocks, which I wish I could just pull a chart of an average of all these stocks we're watching, but I can't. But this is a IBD 50 index. There's just a lot of power there, a lot of relative strength here you see really since the election. And until that changes, I would guess, there's higher prices to come. Just on the buy side, you do want to try to find some halfway decent entry points. So if and when the market tests you, and it will, you have the entry points to withstand it. Okay, that's all the time I have for today. Thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.